So I'm down like $50,000 on USDCAD right now. And, it feels quite good. I'm just playing now. It feels like shit. But I'm going to show you something right here. One of my clients messaged me today in a Discord. He's like, this CAD trade just won't stop. Likes to tickle the balls and leave the shaft alone. I sent him a picture of my trading terminal, which looks like this right now. Negative, just about 50K in drawdown. And I just respond. This is my response to USDCAD not working out at all for like a month and a half. The more the foreplay, the more satisfying the ending is. And he's like, and it's so true. But during the foreplay, you just want to hold her down and she keeps fighting back. And I let him know the post-nut clarity is going to be real on this one. Gentlemen, this is going to be very real, especially if you've been following my trades in the Telegram and in the Discord. Link in the description for my free Telegram channel where I literally share all these degenerate trades, just like the USDCAD trade. I show my trading terminals, the history, I send out the analysis, I do this, I do that, I post everything. I just literally share all the analysis and it's all for free. And you can follow it every day. And I've been running this, showing all the ups and downs, showing all my win streaks, all my losing streaks for the past 6 years since the summer of 2018. I guess it's been like 6.5 years now. Join the Telegram channel. It's free. It takes you like a second to join. You can follow everything. Why am I not that concerned about USDCAD? It's because of statistics. I'm going to preface this by saying a lot of people have asked me, Nick, how do you manage a trade that goes really far against you? You only show the winners, Nick. As though that's actually a real complaint, because it's not. But on USDCAD, a lot of it comes down to the pre-planning of the trade. You see, you get caught with your pants down when you don't think things through beforehand. I trade using dollar cost averaging. It is a dirt simple trading approach. You can learn all the specifics in all my other YouTube videos. So before you leave a comment, if you're new to the channel, just, you're new here. We're going to have a little bit of patience with you. But before you leave a comment saying this is gambling, it's horrible, it's terrible, go watch my previous videos. The ones where I say use a 0.01 standard lot for every $2,000 in the account. Wait a good distance before adding positions. When it comes back, close at break even or profit. This works every single time, 95% of the time. And the one trades that don't work go into a lot of drawdown before they usually come back and you end in a break even or profit after sweating for a little bit, or they blow the account. And I'm going to tell you why that's not bad right now. If you start an account and most of the time it's going to get to the growth target, then there's not really anything to worry about. My first positions on USDCAD were started down here. So right there. My second positions on USDCAD were up here. My third layer of positions were up here and around all these prices up here. There was some more in here. And then also I had another set of positions all in the average of, we're going to say like about right here after it started to fall. And now I've just added again. There's actually right here this morning. So this is the cluster of all my trades on USDCAD. And I shared this in the Telegram channel. I'll just show you right now. That way you can see all my positions. And you may be thinking to yourself, this is really ridiculous. Like, how is this guy even profitable? I mean, he claims to have been trading for like 9 years, claims to know what the hell he's doing to some degree every now and then. But he's in $50,000 of drawdown. He doesn't seem too concerned about it. It's because I know the stats. Now, here's the thing. The more price goes in one direction, the more likely it is to have a reversion. The likelihood of this occurring is literally between 1 and 5%, meaning like getting into a bunch of DCA trades like this where you just keep adding to it. If this pulls back down here, I'm going to likely get out of all this at break even. My hopes of making a profit on this have gone now that USDCAD has made a new high. However, it's not that concerning given the fact that this morning when I woke up, I was in like $30,000 of drawdown on USDCAD alone. And that represents on a $200,000 balance. This is currently in the account right now. That's about a 15% drawdown. I can live with that, especially if that only happens once every now and then. For context, I've made about $42,000 in the past 2.5 months just using DCA trading since I switched to only doing that exclusively and nothing else because it just seems to perform the best for me and it's mindless and it takes almost no effort whatsoever because as long as you size appropriately, you don't really have to obsess over the reasons for the trade or you don't really have to think anything through except for the risk structure and making sure you're sizing things appropriately. So it's super, super simple. And with all that, with that $42,000 in profit, this morning in USDCAD, I was in a drawdown of like $30,000. So in this case, it becomes one of these things where how often can I win a trade, even if it goes against me for a little bit, and even if I feel the pain, I feel it tugging on my scrotum, figuratively speaking, of course, if USDCAD actually did that, that would be like nightmare fuel. I really hope I don't have nightmares about that tonight. But how do I deal with it? It's not really that big of a deal because I know the stats. The stats is that most of the time the account's not going to blow. Most of the time, price is going to come back. Everything's going to end up at a break even or a small loss, or a break even or a small profit or a big profit, depending on whatever. And I know that since this is the case, it never worries me because I pre-planned it from the start. I have millions of trading capital. So putting $200,000 into an account or $150,000 or $100,000 into account, it doesn't matter to me. It's not that big of a deal because if I blow the account, I'll just refund the account and start over. Now, how should you approach this? Listen, none of this is financial advice. This is super degenerate. This is risky. Most people lose money. You should not be doing this at all. This is a complete waste of time. You are more likely, and I'm not lying to you, you are more likely to make money going and getting a job at McDonald's. If you're stupid enough to keep wanting to trade like me and be in a $50,000 drawdown every now and then here's the way you approach it. Let's say you have $10,000 total trading capital that you're comfortable allocating to trade Forex. Figure out what your risk tolerance is, meaning how much are you comfortable losing trying to double the account, and then deposit that into an account. So let's say you're only comfortable risking $2,000 out of that 10K, right? It's 20% of your trading capital. You can keep $8,000 in your brokerage account and don't touch it, or $8,000 in your bank account and don't touch it, and then just put a 2K deposit into a little trading account, right? The goal is to double that account. And if you do double it, then you withdraw. And that's going to happen most of the time. In my opinion, not financial advice, and I can't guarantee you anything, but that's going to happen most of the time. In my experience using DCA for the past 2.5 years, the account's going to be able to double, then you just withdraw the profits. Then you do it again, then you withdraw the profits. Then you do it again, then you withdraw the profits. And every now and then, you get a trade like this, USDCAD. Now, again, this only represents a 15% drawdown on my account. This would have to go exponentially further with zero pullbacks for it to blow my account. And even if it does, that's cool. No big deal. I think it's unlikely. Matter of fact, I know it's unlikely based on the statistics and based on the mean reversion characteristics of the Forex market. However, if that happens, it's cool. What's more likely is that it's going to come back and get into profit. This account will grow to $400,000, actually technically $300,000 to double it. And then that will be that. Right? Then I'll withdraw the profits and I'll start over again. What this means is that if you're able to double the account more than half the time, then you're profitable trading DCA. Literally, it is literally as simple as starting an account and adding to losing trades in such a way that everything is structured from the get-go with your account balance that you deposit that money and kiss it goodbye because at some point it's going to blow. And the second thing is you just withdraw regularly every time the account doubles because most of the time it's going to work, right? Everyone likes to stab at DCA trading and think that their smart money, order block liquidity, bank manipulation, institutional fair value accumulation, distribution gap trading strategies are better than something simple like literally just adding to a trade in a structured risk waiting for it to revert. I know that literally sounds ridiculous, but think about it for yourself here for a moment. Consider the fact that price just goes up or down. It is a 50% chance that it will go up or down after you enter a position. What this means is half my trades just go to their profit target, roughly speaking. Half my trades go to the profit target the moment I enter the first position. If it goes against me, I add a second trade to that. Roughly half the time, price will then go to the original take profit, or at least I can get out at a net profit and break even. Maybe I add the second trade, then it comes back to the first position, and I'm able to close the first position at break even, the second position in profit. If price goes against me, right, this is radically smaller and smaller percentage chances. Then I add a third time. And then right there, it's a 50-50 chance it's going to go up or down. Then I can usually get out in either a net break even or profit, or it keeps going against me. I add another DCA trade. Every now and then I get into a trade like this on USDCAD where price just continues to go in one direction with no pullbacks. And it doesn't, there's all this stuff. Everybody's freaking out. And when this happens, I don't do anything differently. I stick to the trading approach. Because here's what happens whenever you try to, think for yourself and try to predict where the market's going to go and think that you're smarter than just following the trading approach. What happens is maybe you hedge and then it starts going up, but then you get scared and you close the hedge because it starts going down. Then you lose money on the hedge that you put in there and then it starts going back up. And so now you're thinking, oh shit, I should have stayed in the hedge. So then you try to re-hedge, then it reverses again, then it goes into a range like it has for, this is Bitcoin. This is a separate time frame. This is a separate chart. But it goes to a range, for example, and then you end up screwing things up. Maybe you close it all at a loss, then it starts going down. So then you add back into your position the same sizing you were before, but then it reverses and goes back up. So then you close that just to see it goes down, breaks the low, and starts going into more profit. And now you're not in the trade, and you have to get back into the trade. All of these things are completely unnecessary. And here's why. Before you can have any type of predictive or speculative edge in the market, you have to have experience. Experience is the one thing that separates you right now from a person who is profitable based on predicting where price is going to go. All I'm saying is, like, if you can predict more than like 55, 60% of the time where price is going, then that's an edge, right? If you just used a 1-to-1 risk reward ratio with that and you had a, say, a 55% win rate, given enough trades, you're profitable. Now, you're going to have losing streaks and win streaks. Sometimes you'll lose 5 to 10 trades in a row, and that's normal. It sounds insane, but that's normal. Professional traders average anywhere from 2 to 4 down months per year. And DCA is no different. This whole past month, I've closed maybe like $10,000 in profit, but I have this open drawdown right now. It's actually come back a little bit. You can see here. We're gonna take a look at the big screen, kids. I brought the big screen out for you today, and you can see right now it's actually starting to pull back a little bit from my initial entry. So maybe it's on like $42,000 a drawdown right now, 40K instead of 50K. But still, my break even for this position is right here in this general region. That's where the alert is at. That's because I added a little bit heavier as we got towards the top. These were all 1 standard lot positions back here. Closer to the top, I started layering in at like 2 lots, 2 lots, 2 lots. Up here is a 2 lot position. Then if it comes back down, I'll be able to get out of all this cluster of heavy positions here around break even. Then I'll make some profit from the positions that were higher and a little bit of loss from the smaller size positions that were lower. I'm gonna get out at break even, call it a day, and go take a nap. I'm gonna go take a power nap after this. The post-nut clarity is gonna be ridiculous on this one. So with this being the case, it means I never have to worry about predicting what the outcome's going to be. Because when using DCA, even if you have a 50% win rate, I've told people this, and I've also made YouTube videos about this further back on my channel, where I literally just flip a coin to decide whether or not to buy and sell. Literally, the first entry is just a coin flip. And then I will manage the trade. If it goes into profit, I'll close in profit. Half the time it's right. You guys can go watch these videos. It's crazy. It works so well. It's weird how trading with a random number generator or just quite literally flipping a coin trades better than 90% of traders. But you can literally do that, and most of the time you'll end in profit because if it goes into profit, which it will half the time, you close in profit. And if it goes against you, you just continue to add DCA trades. So with this being the case, it means that we live in a world where you don't have to worry about predicting where price is going to go, and you don't have to get so sketched out whenever price starts going against you. I myself sit in this trade. I have not the slightest degree of F's given for usdcad right now. I'll show you some more trades I'm in right now. I'm just going to use this screen here so that way a little bit easier. So NZD USD is another trade I'm in. I'm in like maybe an $8,000 to $9,000 to $10,000 drawdown right now. It actually looks like it's bouncing a little bit, so we'll see. My position average on this is about like right in here, right in this region. I've got positions up here. I added more down here. It almost got into my break even like before Trump got elected. Then Trumpy boy got back. He won. So now, the market reversed. The US dollar got stronger. So that means NZD USD fell down since it's a quote currency. So if price comes back up right here, this is my break even point. I'm going to close right there. I'm also in Euro GBP right now. That's in a small drawdown. I think like $800 drawdown right now. I'm waiting to add on this if price can get a little bit deeper into this little pipsqueak zone up here. So if price can come up here, that's where I'm probably going to be adding out on Euro GBP. And, if it bounces, cool. If it doesn't, cool. And I'm also short on Euro AUD, which I'm not adding right now. I think it's actually going to break this zone. I'm waiting for it to go up somewhere higher. I don't know exactly where, but I'm not adding to this currently. This one sits in like a $600 drawdown. Again, the trades that I'm in right now, you can't just have survivorship bias. You have to look at all the closed trades. I posted my whole P&L on Telegram. Actually, they should probably update it because now there's more profit since I posted it a couple days ago. I posted my whole P&L on Telegram showing like a 40K profit booked over these past two and a half months. Most trades end in profit. And for me, in about a couple days to maybe a week or two tops in most cases. USDCAD have been in this trade. It's Friday right now. So we're about to be able to let's just call it a month and a half. It's been almost a month and a half, about 6 weeks sitting in this trade. This is if I stay in this trade another week, this will be the longest trade of my Forex career. The second longest trade, if this one takes precedent and this wins the election of the longest trade duration. The previous one was CAD CHF at the end of 2022. There's probably a lot of you guys who have been following me for this long who remember that trade that we were in for like all of December and then like little more than half of January before I was finally like, screw this. I got out of it. It was like a 20K loss and it was a bunch of other swap fees and stuff. But this one marks the longest of trade duration. So how do you really manage whenever trades go against you? Well, look at it this way. A lot of this comes into the pre-planning of the trade. Because the simple answer to what do you do if you get in a trade that's in this much drawdown and does all this? Well, one of two things is going to happen, and the answer is you just let one of those two things happen. The first thing that happens is the account blows. That's the first thing. You should accept that before you even deposit the money into the account. That's just a part of DCA. That is why you treat the account like a stop loss. If you're only comfortable risking $100, put it in an account. You're probably not going to grow it because to use the minimum sizing I suggest, 0.01 for every $2,000, you need to have at least $2,000. If you don't have $2,000 to trade with, use a demo account for 6 months to a year. Go work at a tire shop or McDonald's or Arby's or a combination of those three full time, 80 hours a week, 120 hours a week, 253 hours a week. Work more hours than you have in the actual week that you are allocated to just make sure you're actually maximizing your money. But just, seriously, save up some money, get some experience trading in demo, doing this over and over. You'll build up experience and you'll build up capital. It's a win-win. And for God's sakes, don't do any funding firms. Don't do those retail prop firm things. I made a whole video about why I hate them and why they're dumb. Just go watch that. That was like a year and a half ago. But that's the first thing. You blow the account, get used to it. Make sure you're not putting more into the account than you can afford to lose. I think a minimum of a $2,000 starting balance, not financial advice, is what I suggest. That's just what I think. So the second thing that's going to happen is, and this happens most of the time, price has a reversion. You take a deep breath. You get out in either a break even or a net profit among all your trades, even though it went far against you, and then you just roll on to the next one. That's the two things that are going to happen when you get into some shit like this, when it keeps going against you and using DCA trading. And I'll also put at the end of that, and that's okay. The account will either blow or it'll pull back and it'll grow. That's it. Now, of course, that is in the context of make sure that you don't put more money into the account than you're prepared to lose. If you have 10K to trade with, you're only comfortable risking 2K, put 2K into the account. You could even start multiple 2K accounts and trade them all at the same time, taking different trading opportunities on those accounts. I started a 5K demo account that's currently still sitting in profit. It's in a little bit of a drawdown right now because of everything twisting. Mainly the USD pair is going in one direction. But I started a 5K account. That account in closed profit is $1,400 over the course of, this marks the end of the third week. So 3 weeks. So on $1,400 profit and currently at $600 loss. And I post this in Discord as well. This is the group where I call all my trades at. It's called the Nick's Trades group. And right here, this is where I post literally everything. Here's the current, so it's $42,000 drawdown. It's less than 50K, but this was earlier this morning, but it's now around the same price. So probably still 50K drawdown. This was me adding that position up here this morning. You can see my position average sits right here, somewhere in this region, right? I've got some sells for one lot here, heavy sizing right here in the middle, and then I just added this one position at the top. Here's how that demo account is doing. Again, this is a 5K demo. I'm going to start a live account and do this. I only get 1 to 20, 1 to 30 leverage with forex.com, but you can see right here at the very top, you see $6,400 of profit and equity is $5,500. It's a little bit more now because this drawdown has come back a little bit. It's like $400 or $500 right now, but still, that being said, what am I doing on this account? I will show you what I'm actually doing right on this account. I'm going to every single currency pair. And what that means is just the FX majors and minors. There's like 24 pairs you can trade. Depending on which broker you're with, is like 22 to 28 FX majors and minors. I'll just say 24 because that's like the common knowledge is there's 24 FX majors and minors. And what I'm doing is I'm going to the chart and I'm just looking at it very briefly. I'm not looking at a huge big picture. I'm looking at a little bit lower term perspective. I don't want to say lower time frame because it's not like I'm going to the 10 millisecond chart and trying to get the trades tick by tick. I'm not using 1 minute. I look at the 5 minute, the 15, the 1 hour, and I just kind of put it all together. But it's not like I'm looking at the weekly charts. I go to these charts, and what I do is I say, I think it's going to go up. Now, what is the reasoning? How am I actually deciding what reason to get into the trade? There's no reason. It's just my experience. I've been trading for 9 years. I have the experience to dictate and justify what I think is going to happen is worth trading. And then I just do that with a risk structure that makes sense. And most of the time the trades end in a net profit or a net break even. So that's literally all I'm doing. The reason you enter, if you don't have a reason or you're looking at a chart and you're like, I don't know, just flip a coin. I know that sounds ridiculous. Try it on demo, back test it on the TradingView replay mode, watch the multiple videos I've made about it. It's hard not to say that it doesn't. It's hard not to say that it works. Yeah, I think I said that right. All I'm saying is that it works. Go see for yourself. Validate that on your own. I'm not just talking out my booty here. I'm saying go test it for yourself and you can see the same thing. So anyway, I'm just saying, okay, I think it's going to go up. So what I'll do is I'll enter a buy and I'll use a 0.03 lot size. Now, why am I using 0.03? If you operate on the logic that you use a 0.01 lot for every $2,000 in the account, this is just the best way to control risk, because if you get into multiple trades, it's less likely to blow the account. Then a $6,000 account will be using a 0.03 lot. So the account was a 5K demo account deposit. I just decided to round it up a little bit, and I use a 0.03 lot for all the trades. So that's why you see here, like everything is like a 0.03 lot. And then what will happen is I'll, go to sleep, I'll wake up the next day, and then one of two things are going to be the case, right? So the first one will be it's gone into some degree of profit. If I think it's a good time to take profit, and again, this is just fully based on experience and discretion, maybe it gets to a previous high, maybe it's a support resistant zone, so it, bounces up and goes into a support resistant zone, whatever it is. If it's in profit, then I'll close it in profit, and then that will be that. Now, the second thing that can happen is that I wake up and it goes into drawdown. So what do? I wait until it gets to a location where I think, okay, it didn't bounce there initially, but maybe it'll bounce here. And I'll wait for it to get to whatever I think that is. Now, what is this? I don't know. A support zone, the bottom of a channel, a trend line. It just made a new low. And I think, okay, well, it made a new low. Now it's likely to have a reversion back to the upside. The reasoning can truly be anything, and it is really, really arbitrary and subjective. So I'm not going to get into details about like the Wagyu beef bullish candlestick strategy pattern with the 50% of the full pullback on the Fibonacci followed by the engulfing candle. None of that matters. Okay, you try doing that. You've probably tried that yourself. That it works maybe like half the time. So at best, you're probably a break-even trader doing that because you're not using discretion or intuition or anything to help in your trading decisions, give you an edge. And then on top of that, if you're not breaking even, you're probably losing. You're a loser. You just suck at trading. That's how bad you are. So stop following a trading strategy and instead just look at the chart and ask yourself, do I feel like it's going up or down? I get that sounds delusional. I get that sounds unscientific. However, trading is not a science. 90% of it is an art. The only 5 to 10% of trading is like that is a science, is like defining what the risk is. Like that's like scientific. You're like, I can choose to risk $2,000 because I'm putting $2,000 into the account. You can be scientific about that. As far as speculating on where price goes, that is just your opinion. It is subjective. There are 0 objective things you can put in place. 0 objective criteria. You can say, oh, Nick, but I only sell at resistance zones. That's subjective. Yeah, but if you tell 10 people to go find resistance zones on the weekly chart, you're going to get multiple different people drawing multiple different zones at multiple different locations. It is all subjective. So the reason for you entering the trade, all I'm saying, just do whatever the hell you want. Okay? You're just throwing darts at the dartboard, seeing what hits near the bullseye for the first 6 to 12 months of your trading journey anyway. It's not even trying to be profitable. You're just trying to get a feel for how price moves and what happens and what the best decisions are. And you only learn through experience and trial and error. So with that said, if price goes down here to the next zone, this will be my first buy position. I'll just add another buy right here. I'll add another buy at the lows. Then what's going to happen? Well, gold sticker for you if you said that price is going to go up or down. Why? Because that's just what's going to happen. It could go against you. It could go further down here. I'll keep the original arrow. Go further down here. And then if that happens and it goes down here, well, I'll just add again. And again, this is if it doesn't bounce the first time, which is a 50% chance. This is if it doesn't bounce a second time, at which point you could just close that buy and profit there. Then you close this one at break even. And then if it doesn't bounce that time, then you go down here and you add again. And guess what? If it doesn't bounce there, you just add again. You just keep doing it. You just do it over and over and over. Then eventually price has a bounce somewhere because price doesn't just go straight up and down. And then you can close it either a break even, or if you think it's going to keep going, you can hold it a little bit more. And then if it goes into profit, then in this case, it will be a profit, right? Because you'd have 2 profitable positions, 1 break even, then 1 tiny loss. So you'd make a net profit on this of like 1 unit of the distance between like these 2 trades here. But all I'm saying is that go and test this out for yourself. Don't be freaked out if you're down $50,000 in a day. Actually, maybe it depends on how much trading capital you have. If you have millions of trading capital like me, not a big deal. If you only have $50,000, then maybe that's a really bad thing because now you have a blown account. You should probably go get some therapy and some counseling and some financial planning help to make sure that you're not making stupid decisions like that ever again. Very, very dumb. Very, very sad. But with that being said, that's how I manage trades like USDCAD that just keep going into drawdown against me. I let the account blow. Again, I know it sounds ridiculous, but if you've actually watched this video and if you've given 2% of a shit to listen to what I'm saying, you'll know that that's not a big deal. Saying like, yeah, I'll just let the account blow. That's not a big deal because most of the time it won't happen. And you'd usually be able to double an account a couple times before that happens. And if you've been withdrawing your profits every time, then when it blows, it's just a small percentage of the profits you made. No big deal. You just keep going. And then if it doesn't blow, which is most likely, then it'll come down. And then you'll be able to get out in a net profit or a break even. And that's that. If you enjoyed this video, good. Happy you did. I'll see you in the next one. Bye.